probability trading strategy, you're full of crap.
If things aren't working, then that's a quick trip to the poorhouse.
To learn how to drive the beater before you can drive the Lamborghini.
Now you're playing with the house's money.
Okay, the big question for today, guys, is will fear boost your trading success or will it wreck your account? And so, good morning, Mike, or good afternoon. You're on the East Coast. I'm out here in Hawaii, and so there's two kind of fears. One fear will propel us forward, and the other type of fear will repel us from achieving our optimal. And so, how do you recognize it? And so we want you to stick with us today because we are going to basically show you how to master fear and finally trade with confidence and consistency. So, so Mike, do you think that people get too hung up on fear, when they're talking, because you hear it all the time, FOMO and fear of this, fear of that. So
yeah, I think fear has become a little bit too much of a buzzword, and FOMO, and it just seems like everybody on Instagram and YouTube love talking about this topic, and I think that talking about fear is a good thing to do right now because I think that there's to the point of the thumbnail, right? Is fear good or bad? I think that it could be both. I think that you feel the same.
Yeah. So, well, I think we both agree also because of our, our Christian beliefs and all that kind of stuff. There's a healthy fear. There's a healthy fear of like the fear of God. And it doesn't mean that you're cowering and going, "Oh God, he's going to strike me with thunder and I'm going to die." No, it's a healthy respect for the Almighty. I mean, and so having healthy fear and unhealthy fear, there's a thin line between them. And earlier I was calling it smart fear and dumb fear, and that may be a little bit overreach, but it's kind of like that, don't you think?
Yeah, I think so. It almost reminds me of this old skit with Chris Rock, where he was talking to somebody, like a parent, like a mom talking to the son, and son's like being just out of control. And then she's like, "Oh yeah, well guess what? I'll tell you, Daddy." And then he's like, "Oh no."
Yeah.
So it's kind of like that where, hey, we should have a healthy fear of not following our plan. Maybe that's a healthy fear, right?
Yeah.
Well, what happens if we don't? And I'm sure that we'll get into this as it goes on. But what if we don't manage risk or even put risk first at the forefront?
Yeah. So, yeah, I like the quote from Mark Douglas where he talks about, he says, the best traders aren't fearless. They just fear the right things.
Oh, that's good.
That is a rich statement. And so, hey, guys, if you're struggling with fear out there, just drop a little Y down in the comment section. We really appreciate that because, Mike and I would love it if you would engage a little bit and just say, hey, yeah, why? Yeah, fear is an issue for me. But we're going to be breaking down today, both smart and dumb fear, or to say it a more gentle way, healthy fear and versus unhealthy fear, and how do you shift your focus? So Mike, do you have any great stories about places in your trading career, or maybe just real life, where you were plagued with, let's say, the unhealthy kind of fear, the fear that was based on false assumptions?
So let's see. I was actually going to think of a spot where you should be fearful, but you want to be courageous.
Okay.
In the face of fear, right? So I'll give you an example, just like maybe from a week or two ago, a conversation that I had with my daughter. She wanted to go and be have courage in front of a friend.
Okay.
And she ended up, like playing a prank on somebody that wasn't too nice. But she thought that, you know what, well, like I'm afraid of doing this thing, but maybe if I'm put that fear in my back pocket and I have some courage, like that's a good thing, right? So I had to sit her down and kind of explain the difference between uh, healthy fear and unhealthy fear. A great example of a healthy fear would be like, all right, so let's say that there's a giant bag of money sitting across the street, or something that she wanted very like she really wants to get a smartphone. So
Right.
all right, let's just say that there's a smartphone sitting across the street. Now all you have to do is just walk across and go get it. Afraid to do that? No, just walk across the street, go get it. That sounds pretty easy. Well, all right. Well, what if I blindfolded you and then let you walk across the street? Well, when you go, oh no, no. Well, why not? What's the big fear? Well, I'm afraid that I get hit by a car. Yeah, that's uh, a a good, healthy kind of fear. There's some things
Yeah.
that we should be afraid of. There's some things that we shouldn't be afraid of. Well, we should be afraid of doing the wrong thing, right? Doing the wrong thing might be playing a prank on your friend. Doing the wrong thing might be not adhering to your trading plan.
Yeah.
Why? What's the consequence of it? Well, if you prank your friend, maybe you lose that friendship. Maybe you get into some other kind of trouble. If you don't follow your trading plan, then maybe you end up blowing your account.
Okay. Yeah. Yeah. I know that's and it's like, those are great analogies, and I love the because I come back to that crossing the street things. Okay, crossing the street is a normal everyday occurrence, right? However, like you said, if you're blindfolded, all of a sudden that crossing the street becomes much more challenging, and you know you should be rightfully afraid of crossing the street because you can't see.
Right.
But I wonder sometimes if, especially in the world of trading,
Hmm.
is that people sense that they're afraid, but it's partly because they can't see. Because
Mm.
they don't have a trading plan. And they haven't committed to using a trading plan, and they lack three important components, which I consider
Okay.
is consistent discipline, and
Hmm.
then patience, and being prepared. They
Ah,
they miss those four things, and because they are kind of flying by the
so
seat of their pants.
well, wait a minute, wait a minute. Do they have an awareness that they're missing those things, or is it one of those voices in the back of their mind that's saying, "Hey, you know what? Like something's off here," and it's kind of like that it is it that kind of fear, or you think that they have that awareness already of what it is that they're missing?
I think it initially, when you start out trading, is I know for myself, I didn't know enough about trading and what to expect. I didn't have a plan. So in
Hmm.
reality, I was, for lack of a better term, I was ignorant of what I should be afraid of.
Yeah, yeah, I remember those kind of fears too, and those are the legit fears, right? Where you don't know what you don't know, and you don't know if you're about to place a great trade or if you're about to walk into a minefield.
Oh, exactly. Yeah, exactly. I mean, uh, there was no process to follow, and therefore now with the way I, trade today, is I have a process to follow. This very successful process and all
Mm,
that type of thing. And now, if I don't follow that, because we can all slip off the wagon, we can fall
mhm,
fall off the wagon and go, I was such a great, mechanical trader, and all of a sudden I became an impulsive, compulsive
mhm,
trader. Because I think the impulsive and the compulsive part
right.
are lingering. to kind of lead a trader astray, lead me astray, and they can still crop up their head. So recognizing when they start to crop up their head typically is when I try to, as I said, be impulsive, be compulsive, trade outside my trade. I won't say my comfort zone, but trade outside of the zone that I've said, I only want to trade between the final hour of the day, or
Mm.
I will put in my orders, after hours, so that I know it reduces my emotional instability, for lack of a better term, by basically taking actions during that time. But it took me a long time to
Right.
figure out what those proper times were,
Okay.
and and I think it was partly, it was emotional decisions, compulsive, impulsive decisions, and normally what would happen is I'd get whacked upside the head with, I'd get into a trade first thing in the morning, and then it would turn against me, and I go, then I would be struck with self-imposed fear,
Mm.
because I'd be going, "Oh crap, I did it again. Oh no." And so I don't know,
Right. Right.
maybe I don't know if anything like that has ever hit you or.
Well, the thing that it would hit me at well was where you start to figure out just to go back to the minefield example for a moment. I think that every system out there has its own minefields,
Mhm.
and the difference between a professional and an amateur or somebody that's just getting started is that you start to figure out where the mines are.
Okay.
So as you're going through your system, the reason why you're able to perform well, why I'm able to perform well, uh, is because we know what mines not to step on, right? Well,
Yeah.
we know that, like for example, for me, if I don't have a good cushion, a good profit cushion going into earnings, then that's an example of a minefield where uh, I'm in a trade and then all of a sudden the trade is down 20% in a day, and I don't have any profit cushion uh, uh, to hold up uh, my equity curve. So that's something that could dig me into a hole.
Okay.
But
Yeah.
let's say I'm early in the process and that landmine happens and I'm like, oh, this system is garbage. Let me switch to something else. Well, guess what? Now I've got to go try to figure out all the new landmines again. And that
Mm.
keeps on happening. And that's how people system hop because they don't know where the landmines are. And they have to start back from square one to figure out where the landmines are there. It's much better to stick with a system that you actually like, figure out where the landmines are, and then do your best to come up with rules to avoid them.
Oh gosh, that is so rich. And I think that, you talked about system hopping,
Yeah.
basically is, it makes me wonder, is system hopping where you jump from one system to the other, you spend, 2 weeks, a month, trying to learn one thing, you know, w- is the reason we system hop because we're afraid, or we've had some losses, it's torn the scab off some old wounds of where we've lost in the past, and that we're afraid that, well, this one's not going to work either, so I might as well jump immediately into something new that I think is going to work, but I'm not sure it's going to work. And so it seems like the level of fear then can escalate, uh, because I think there's sidebars of fear. Well,
Sidebars. What do you mean?
if you're a guy, what's my wife going to say if she knows I got into another system and, oh my gosh, I'm losing again?
Right,
That's
right. If they're even aware of how of what you're doing and how you're doing it.
Yeah. I mean, but that's something that, I mean, I remember early days of my trading is I was fearful that, oh my gosh, I hope Michelle doesn't find out. I just
Mm,
messed up again. And that is not a I've heard the old adage of scared money doesn't make money.
sure. Yeah, that oh wow. That takes it to a whole nother level, right?
Yeah.
because you're managing the funds for the household. It's not just yours; it's ours, and a very important ours. So, yeah, wow, that's a big could be a big fear.
Without a doubt. And so, but so have you ever hit a trade because hit a trade because you were scared of missing out, only to get crushed? I know I have. And if anybody out there has had that happen to them, just shout out and say, yeah, I've had one of those kind of trades.
Yeah,
But
help me not feel so bad because I tend to think that it's only happens to me. So if that's happened to you too, type into the chat and said, "Yeah, me too. Don't feel so bad,
yeah,
Mike."
me too. and uh,
Right?
and just make
Start a new Me Too movement.
yeah, here like a yeah. Here, you just do it like this, guys. There you go. Um, so healthy fear, unhealthy fear. We talked a little bit about, healthy fear is kind of a respect for our rules, um,
Mm,
uh, respect for risk, and respect for the plan, and keeping your discipline. Um, so to me, it almost seems like unhealthy fears come from lack of discipline, or at least part of the thing that generates them is a lack of discipline,
mm,
uh, and also a lack of trust. Because if
mm,
I can't trust both my system and or myself, I I tend to walk into something and be apprehensive, and apprehension is just another word for afraid.
mm.
So what's your thoughts about that? How what are demonstrations of both healthy and unhealthy fear for you?
Well, for me, an unhealthy fear, I think, would be seeing. Well, you and I have been working together for how long now? A few years, right?
Yes.
So an unhealthy fear for me would see, well, you took that trade in. Well, what was it last week that you were talking about? NNE. Well, was that
Yeah.
the right ticker? Yeah.
Yeah.
So
In any.
that's a trade that took off the shot up what 70% or something in a few weeks,
Yeah.
close to it,
Look,
if not that.
almost 60. It was 58%.
Right. So I'm an unhealthy fear would be like, man, Dennis is crushing it. I should go and see what his next trade is going to be because he's doing so well and I don't want to miss it. Right.
Yeah.
For me, that would be an unhealthy fear for me because I have my own system, my own way of trading. And even though you and I look at the same kinds of things, if I just go and take, well, what your trade is because I'm afraid of missing out on money, that's an unhealthy fear.
Okay.
A better fear, a better way to tweak that if I were to say, all right, Dennis was able to really nail that trade last week. How can I? And I want that for myself. How can I learn from him and see are there things that I could take from Dennis and integrate it into my system? How could I go and learn more and so that way I could have those same kind of results? I think that well, when there's fear that because there's a
Mm.
it's more of an inquisition or being inquisitive trying to learn. Well, when I'm trying to learn, I think that starts us on the healthier path. Well, when it's greer greed based,
Yeah.
then that's inappropriate and it causes us to make silly moves.
Wow. That's that. And that kind of reminds me. I'll have to add that to the list of some of the things. Is that aspect of you're talking about a comparison? And uh, comparing what I'm doing to what you're doing, or or vice versa, or
Mhm,
to anybody. We could compare ourselves to how Mark Minavini's done, and all that kind of
mhm,
stuff. And comparison is never. I think comparison is a breeding ground for fear,
oh,
because
sure.
I think it can stimulate, or maybe it's the fertilizer to fear. I don't know. It can stimulate that.
Either way,
Stimulate
it stinks.
either way. Yeah, it can stimulate that I'm not doing as good as I should be doing. Therefore, and so then it can cause you to get locked into, oh my gosh, I can't take action appropriately. But like you said, how do you turn that unhealthy fear into a healthy fear? And as you said, okay, hey, you step back, didn't do a comparison, but just say, hey, what can I learn? What can I learn from this aspect? And take what you can, and you don't have to take the whole thing, but take what you can and then throw the rest away. But
Mm.
if you wind up avoiding the fear trap, then you're so much better off as a trader. And so I love that. But I think there's other things out there that can trigger our fears. We've hit on a couple of them. Uh, the aspect of emotional panic. Have you ever been? I mean, I remember days when I would get up in the morning, and I'd be, especially when we lived in a time zone when the market opened at 6:30 rather than 3:30,
Mm.
where I would be online half hour before the market opened to take action and all that kind of stuff, and and I would inevitably make the wrong decision.
Mm.
And that would then generate a level of fear that I would carry through the rest of the market day. And dadgummit, carrying that kind of fear through 6, 7+ hours can
Oh,
be, it takes its toll,
well,
you know?
sure.
And
And it makes complete sense. You've lost trust with yourself.
yeah,
Right? Every time that we deviate from our plan, because when we make plans, it's a promise. It's a promise to ourselves
well,
that we're
that's
going to
good.
do X, Y, and Z. If we go and you know what, let me go do this other trade. Guess what? We just broke a promise to ourselves. So we subconsciously told ourselves that we're not trustworthy,
Mm,
right? And so it takes time to build that back up. So
yeah.
yeah.
Well,
um,
all I can say is what happened to me is just that pain of the fear, the pain of the
mhm,
decisions, the pain of the lack of trust for myself was what caused me to come back around to, wait a second here, let's identify the times of the day in the market I can actually trust myself. When do I,
mhm,
and that's where I came up with, I either trade final hour of the day or after hours, and
mhm,
utilize the, my target shooting expertise to get into some trades. Like this morning I was, on the stock pre-flight checklist that we put out for ETFs and stocks this past weekend. Okay, I triggered in this morning 2, 3 positions, which is great.
mhm,
But I bought them where I had, where I wanted to buy. I wasn't, I wasn't, and so that was again part of the thing that helped me get over my aspect of fear is is and also provides a little bit more control because we can control when we get in and we can control where we get out.
mhm.
But I think knowing that, accepting that was a huge move towards trading fearlessly. Does
Treating
that make sense?
fearlessly. Are you at a point now where you're completely fearless? Would you say?
There is an if. Yeah. If I'm following my rules and basically operating within the parameters of my system, then I am fearless because I
Mhm,
know that I'm protected to the downside and I've projected the profits that I will accept. Now, it doesn't mean that the entity isn't going to take off and go further than my profit targets, and I'm
mhm,
okay with that. But I've had, it's a talk I had to have with myself. I had to
mhm,
become, I'm okay with this, because
mhm,
if you get up and you take a 20% profit, and then that entity goes on for, goes on to 55, 65, 75, 100+ percent. Okay,
right.
I have to either be happy with the 20% profit and say, I'll get back in once I get another setup, or I have to adjust my system, plan it into my system where at least a piece of my position will still be open
Mm-hmm.
to take advantage of that larger move. And that's the way I've designed the system. And to where I'm not, and so sometimes I get those rides, not often, but out of 10 to 15 trades, we'll get a ride that is over 30%. And and people can go check the statistics on that happening. And even Bill O'Neill talks about it, is that very few stocks, after they run up 25%, they'll go into they don't go much higher than that without doing a pullback. So why not take your 25%, be happy with it, and then because you're beating the heck out of the majority of people who are trading out there. So yes, the answer to your question is, if I am following my process, I can trade fearlessly. What about you?
Yeah, and to add to what you just said too, I've read your book. And I know how thorough your system is, and well, what I think that you just pointed to was that fear of the unknown, and so you don't fear the unknown because you know your system so well. You know it inside and out, forwards and backwards, back tested, forward tested. You know the stats. You know what happens if you follow it over thousands of trades at this point. So yeah, from that perspective, fear of the unknown, well, there is no unknown. So there's nothing to fear there.
That is absolutely right off. Now, part of the thing also in the fear aspect is that help temper my fear aspect is knowing what I could control and knowing what I can't control. And so once I get into a trade, okay, I can control when I enter the trade. Now, if I don't get filled on my entry, okay, that's fine. But I've at least taken action to control what I control. I want to buy I want to buy my entities at a discount. I don't want to pay wholesale I don't want to pay retail for I want to buy at wholesale. Then at that point, once I'm in, I recognize I can't control what's happening. However, by utilizing a strategic stop loss and then also a trailing stop to go with that and a strategic profit mark, I'm controlling where I'll get out one way or the other. And again, it's having that talk with myself. I have to be good with that. And and I am, and it's it's so great to be able to basically be able to walk away from the computer every day, and I don't have to watch the computer every day. I mean, or watch the screen all day. When I'm trading, I go in final hour, I check things out, see how it's looking. Do I have a new trade? And so people might be wondering, why do I go in the final hour? Why is the final hour such a big time for me? You ever wonder about that, Mike?
Yeah. Well, I could. I have a few ideas, but why don't you tell us?
Okay. The reason I like go in during the final hour is because I like to trade candlesticks, right? Throughout the day, you don't know exactly the story that the candlestick is telling you until the complete trading period is over with. So you don't know if a hammer is going to be a hammer until the final. So during the final hour, then you're getting a better expectations of what the story that candlestick's going to tell you during the day. You're getting a better appreciation. You're closer to to the end of the story, and you can say, oh, okay, yeah, this looks like it's going to be a hammer. So now I can make a decision. Do I want to get into a trade? Another reason is because I like to trade we were talking about breakouts last week. I like to trade closes above the 8-day moving average, right? So
Mhm.
what I can do is go in the final hour and say, okay, it's holding above, and say the price action has gone above the 8-day moving average without getting into a lot of details. I can go ahead and I can put a conditional order in to say, if I close above, if at 10 minutes before the market closes, I'm above the 8, but below the high of the day, go ahead and execute an order for me to get me in. And so
Mhm.
that's the other reason why, you know, I'm I'm closer to the end of the story. So that's why I primarily trade during the final hour of the day, because I've got my picture is more complete, more so than it is during the first hour of the day. Because the first hour of the day can, we've all seen this, can look very promising. Oh, it's taken off like a bandit, but by the end of the day, you've got a bearish signal, and then
Right,
then you're
right.
going, crud.
Yeah, that's why the end of the day was also so important to Bill O'Neill. End of the day, end of the week.
Yeah,
Right, we would often wait until the end of the week to see, well, how do we close the week? Or do we close above the 10-week line or not?
that's beautiful, Mike. I mean, yeah, yeah. The making that determinations. I think part of our again, I think that so much of this is just self-imposed fear because
Mm,
we don't understand. And or no, not no, we don't, it's not that we don't understand. We misunderstand what it takes to be in the market and to be a trader. And sometimes, and for whatever reason, we have this confusion about, well, I have to be watching the market all day long in order not to lose money or to make the right decisions.
mhm,
And that in itself leads to so many mistakes. And you just set yourself up for failure when a person does that, I believe, because it's a false belief. Um,
mhm,
and again, that's part of the thing. So let's see. So unhealthy fears we talked about. We talked about unhealthy fears being like emotional panic, FOMO, fear of loss. This all destroys our process. And so we find that healthy fears are honoring our stop losses, our process, and uh, and also fighting the temptation uh, that would cause us to not be patient. And so unhealthy fears will cause us to bail on a great setup because you've lost when you've had similar setups in the past. So which fear is running your trades lately, guys? Discipline or doubt? So
mm.
so
Yeah,
we
that's
jump
a
down to fear tied to pain points. Now, we've hit a lot of those. Let's see, how are we doing? Yeah. Um, but what about the fears tied to pain points? We know the biggest pain point that people have out there is trading consistency, and that
mhm.
drives a lot of other things. But Mike, in your experience with trading mindset and all that kind of stuff, of those, what we got four things there, the potential pain points. Um, how do they rank out to you, and how do you help people through those pain points?
Yeah, I think that, well, one of the well, like you mentioned, consistency is a big one, but it's also, am I headed in the right direction? Because I don't want to be consistently doing the wrong thing.
Yeah,
Right, and that's where, uh, that other point that you mentioned too, where, let's say that you take a trade, and you lost. Let's say that you take another trade, and that one's a loser too. Does that mean that you should, not take the third trade if you deemed it to be a high quality trade? That might be a fear that starts to pop up. Oh man, I just did this twice and I lost money on both of them. Should I take that next one? Well, what does the system say? Is this a high quality setup? If it is, then yeah, you should take that one because you could flip a coin and it could land on tails 10 times in a row. That doesn't
yeah,
mean that the coin is broken. The idea is to flip the coin as many times as you can so that way it eventually normalizes out and you'll get your 50-50 win rate, let's say. But
Sure.
the idea is that you're making more on your wins and you're losing less on your losses. That's the idea. That's how you manage risk. That's how we should go about managing sizing too.
And so, yeah, you mentioned, Mike, the aspect of in the past, you talked about recognizing your fear and talking to your fear. You said something along that line where you basically, uh, challenge your fear, and in
Yes.
addition, in some of our last episodes, we talked about, you know, knowing the parameters or knowing the batting average of your trading system,
Right,
and
right.
recognizing that if you have a 50-50, 50-50 or 60-40 win-loss ratio, then there's going to be times where you could lose 4 or 5 or even more, trades in a row.
Mm-hmm.
And it would seem like and that inevitably is going to happen to every trader. But I'm sharing that to say this is that when you've had multiple losses in a row, I think that's another area for fertile ground for fear to crop up.
Right.
So what, how do you talk to your fear? How do you pre-plan what you're going to do to avoid being caught up in that fear trap?
Sure. So yeah, well, like you were mentioning, right? We need to take those fears out of the closet, sit them down, have a cup of coffee with them, and talk to them and say, well, why are you here?
Yeah.
What are you trying to
Oh,
protect me from? Right? Because many of these fears are trying to serve us in some kind of a way.
okay.
So it's up to us to try to figure out how are they trying to protect us? Because if we just tell them to, you know what, they're just shut up, go back in the closet, nobody wants to talk to you. Maybe that lasts for a day, maybe it lasts for two. But when the market is chaotic and you start to see, man, maybe you see 2, 3, 4 positions all down on the day, man, maybe the market's gapping down. And then you start to freeze a little bit. That's when those fears will stick their head out of the closet and start to whisper all the chatter to us.
Oh, yeah.
So this is why we need to not wait until that moment, but to invite them out of the closet, sit down with them, and ask them, "Well, why are you here? What is it that you're trying to protect me from?" Well, honestly, like Mike, you haven't thought through these other kinds of scenarios, right? Like, what happens if all the trades are down 5% at the open, right? Like, well, we're going to lose everything, right? So you should be selling a lot faster. All right. So how do I? That's a good point. What if we come up with a plan for how we'll size, so and how we'll track everything, so that way we know precisely how much we'll lose if every single trade moves against us, and how much we would lose if every trade went twice as much against us, like it would gap down below where we have our stops. What if we
Okay.
knew those kinds of answers ahead of time? Would that make you feel a little bit better?
Mm.
Talk to the fear. Yeah, maybe we'll try it out. And then like it's that kind of a conversation that you have with yourself. Maybe it sounds nuts, but these are the kinds of things that work. And there's so many ways that we could do it too. A traditional way is journaling, but now, I was just talking with our accelerator members over the weekend. Well, a great new way of journaling is to just have a conversation like that on your phone or whatever kind of recording device you have. Record it, take the transcript, upload the transcript to something like a GPT.
Right.
Have it go and it could not only create a report for you or create a journal entry for you, but it could also analyze your conversation for you, which is pretty
Wow.
wild.
That is so rich because, if you have a smartphone, you can go in to ChatGPT and actually click in certain area where it will go into a audio mode, and so you can actually have a conversation with ChatGPT. Now, I've named my ChatGPT, my custom ChatGPT that does this. I've named him Buddy, right? And so we will have a discussion. Now, okay, hey, Buddy, um, and and I'll talk through various stuff, not about necessarily about trading, but that gave me a great idea. I'm going to go, okay, I'm going to go talk to Buddy about my trades. And like you said, it gives you a wonderful transcript, and then also the ability to sort through to see if there's any sticky points that need to
Right.
be addressed, and so I see our fears, and I think you've hit on it, Mike. You take your fears out of the closet, you have a talk with them rather than hiding them in the closet where they come back, and because I think when they don't stay in the closet forever, they will eventually, either if you don't invite them out, they're going to break out themselves and slap you upside
Mhm.
the head, and that's not the way you want to do this. But you invite them out, you have a discussion, and then the unhealthy fear is leaving, not recognizing the fear. Okay, I think that's one of the big criteria, or one of the big issues. At the same time, the healthy side of fear, it's the same fear. Okay, we have to recognize it's just, a lot of times it's the same fear, but from the healthy side, come up with, am I addressing this fear with constructive action? In other words, is it causing me to, oh, I had better write down my, trading rules. I better divide my system and all kind of stuff, because that will help me manage the fear that I have, or take it away totally. Like I said, to be able to trade fearlessly is a really cool feeling. Um, and because I trust myself, I trust my system, but I really think that having that talk, and like you said, journal it, or you know speak to a mastermind group, and that mastermind group is okay to be one of the something like ChatGPT, I think. um
Mhm.
you know unless unless you have fear of sharing your your information with ChatGPT. But so we talk about the triggers of unhealthy fear: FOMO, past trauma, and then overload of being like uh, pride, greed, trying to get things absolutely perfect. But what about those triggers? What else what else, along with those triggers, please embellish, not embellish, but go in and expand on these. FOMO, everyone else is getting rich. You hit on that a little bit earlier. Past trauma. Last time I got crushed, so I froze. But sometimes the past trauma, don't you think, can be trauma from just life, regular life trauma, or life, life issues with what we believe, conflicting beliefs. Like I know with my mom and dad, love them, they were awesome. And they always tell me, Dennis, you can do anything you set your mind to. And so that's a very positive thing to believe in, right? At the
Mhm.
same time, though, they grew up in the Depression, and back in Arkansas, and there was very much a caste type system, that there's the haves and the have-nots, and they were on the side of the have-nots, and they said, but you know, don't but the thing that they would say, but don't be too successful, because we don't want you to become like those rich people. So
Mhm.
see those two conflicting beliefs,
Yeah.
and learning how to deal with that. Then that was a, yeah, I won't make it dramatic, just that was the my trauma, but it was certainly something I carried around for a long time. So what about those
Yeah.
triggers? What are your triggers?
Yeah, so that certainly sounds like something that would keep somebody from becoming wealthy person, or might be a hurdle to get over at the very least.
Yeah.
Yeah, I had similar stuff growing up too. The people that had money were evil people, right? Because and why did my parents think that way? Because we didn't have any of it. That's why. So it's very easy to scapegoat the other side when maybe there's some of the things that we spoke about already, envy and those sorts of things. But to bring it back to what you were asking, go well. Help me out, Dennis. Well. What's the question again? I want to make sure I get this right.
You were supposed to remember. No, no.
No, now I'm afraid of forgetting.
So, okay. No, the three trigger, we talked about three triggers of unhealthy fear. The FOMO, past trauma,
Right.
overload. And so, what are you, maybe you have some different triggers that you have to be on the lookout so that fear doesn't crop into or pull into your trading or even your life. I mean, because people can
Sure.
live a fearful life.
Yeah, absolutely. For me though, one of the things that helps me the most is having the full on written business plan and just keeping it by my side, so that way I know I've not only thought through everything, but I'm able to reference anything at any point.
Yeah.
I have it written out. I have it on my computer, so that way I have multiple ways to access this thing. And if it needs to be updated at any point, it's very easy to access, print out, throw in another copy, and then I'm able to review these things.
Cool.
So I know how to operate my trading business no matter what the market throws at us.
Okay. That's good.
What I'm supposed to analyze. It might seem obvious, well, what to analyze, but so often, if we're not intentional about it, any random thing can start to come into the analysis.
Yeah.
Earlier example, right? Like, Dennis is up 57% on this trade. So therefore, Mike should go and try to tweak a system or well, if it's great to try to level up.
Yeah.
But it's not great to add in analysis that's not a part of your plan, right?
Right
So
on.
if I'm doing, if I'm placing a trade out of something like envy, then that's outside of the business plan. So
Yeah.
I shouldn't be doing that. Now, if we're in the post-analysis stage, where or the back testing stage, where it's just like, all right, it's that time of the trading season where it's time to level up. Well, what am I going to level up? What am I going to test? Well, there's I'm doing all the post analysis, what worked, what didn't work, testing out new ideas. Oh, well, I have this idea from Dennis, and I'm trying to learn what he did and how to do a little bit more of that. How can that be integrated into the system? Now, that's the appropriate time.
Exactly.
And all that gets factored in to the business plan. And it's why it's so important for us to have our business plan.
Yep. That is so awesome, Mike. I mean, because that aspect of kind of trading, I think that we're all susceptible to, the issue of trading envy or well, gosh darn it, they got the big run, because I recognize that that can drive us big, especially if it drives us outside of our plan and our program or our system. If it drives us outside of that, to then let the old habits, the bad habits back in, like being compulsive, and say, well, like you said, if you would have taken that, well, Dennis ran up 58% on this one trade. Well, I'm going to jump on right now. Well, that may be the absolute worst time. In fact, it would have been the absolute worst time to try to jump on. However,
and that happens so many times. That's happened to me so many times in the past. I've seen that happen to people every day.
Yeah,
every day, chasing profits, and it's No,
Yeah.
we've got to put an end to that.
And on the charts, there's a very distinct point on every chart that shows exactly where the greed and the envy traders took off, are the ones who were excited. And
Mhm.
and those are typically swing highs.
Mm.
And what it does is it leaves a pocket of uh, of traders right there who are very dissatisfied. They're very unhappy that, oh my gosh, I got in at the high again, and they've
Mm.
suffered through a pullback. And so that's one of the reasons. Here's a little technical advice, technical tip for you, is that's a lot of reasons why, as say you plan your trade to get in on a pullback or on a breakout of the moving averages, and as you approach that past high, you ever wonder, all of a sudden sellers show up and they start selling, and you're going, oh gosh, there goes my profits. And what it
Mm.
is, it's the pocket of sellers who are sitting there, and they've been saying this prayer: oh dear Lord, if you will just let me get back to break even, I
Hmm.
will never buy, I will never jump in too late again. But unfortunately, they do jump in late again. So yeah, that's really rich. Um, so what about this? We talked in the past about the seven deadly sins of fear-driven trading. I think that's still applicable, right? Um, and so how does that drive? We have pride, greed, lust, envy, gluttony, wrath, and sloth. And I know there's modern names to all of that. But like on sloth, you don't do your research, you're lazy. And so
Mm.
so you only live once. And so you see that a lot by some of the traders out there who, after they've made a emotional type trade, oh, you will, and they'll do the, is that YOLO or something like that. uh,
Yeah, you only
and
live once, so all in, baby.
yeah, and we saw that a few years ago with some of the meme
Yeah,
stocks.
GME and AMC.
Yeah. And people were making, they were, some of them were making really big gains. At the same time, though, there was probably a lot of people who were making really big losses in the same thing.
Mm.
Um, and one of the things so sloth, they're lazy. They don't do the research, or they don't educate themselves. So what are some of the other ones that stick out to you?
Let's see. We've already spoken quite a bit about envy. Uh, Pride.
Mm.
Pride, yeah, it's Pride Month. I think they canceled Pride Month, didn't they? Trump, from my perspective, that's a good thing. You don't want to have a ton of pride, especially when it comes to trading. What we need is a healthy dose of humility,
Yeah.
um, because when we start to get too prideful, that's when you tend to see people digging in their heels. Uh, let's say trade goes past that, hits their stop loss. Well, guess what? I don't need no stinking stop loss. I'm gonna use a mental stop, and then we'll see what happens. Oh well, then guess what happens? Uh, Price goes a little bit further against you. Oh well, it'll come back. It's
Yeah.
fill in the blank, whatever name is your favorite company. Maybe it's Tesla, maybe it's Spotify, maybe it's Netflix, well whatever it is,
Yeah.
Disney, Apple. Yeah, it'll come back. It's Apple, right? They're not going anywhere. Well,
Yeah.
yeah, maybe it does. Maybe you end up sitting with dead money for a year, 2 years.
Right.
Is you're losing money or are you losing time?
Yeah.
Both of those are very important. I'd say that time is even more important.
Oh, without a doubt, without a doubt. That's why I think that even long-term investors, uh, it should have some kind of a stop on their losses. Okay, because as you were saying that the person who moves their stops and removes their stops. So I don't need no stinking stop losses, and it falls against them more and more and more and more and more. It can go to zero, guys, but it's so funny how all of a sudden they shift into, oh, well, I'm a long-term investor. I'm a buy and holder. And you're going, BS, that's baloney. Don't tell me that. But one of the ones that sticks out to me, and I think that, because I was guilty of this, is over trading due to boredom. Or the misconception or the thought that I have to be in a trade all the time. Because if I'm not in a trade all the time, I'm going to not make money. And the fact is by wanting to be in a trade all the time, I was actually losing money. And so we have to learn that sometimes the battle line that we're up against is just not to lose, that kind of stuff. So, yeah. So let's roll on down here, because we want to take a look at the 7 mindset shifts in the time we have remaining, to talk specifically about how do you turn unhealthy fear into healthy fear. So, Mike, you want to jump off on those?
All right. So the first one here: practice consistent discipline. Patience and preparation are skills, not traits. So how can we do more of that? I actually find it very easy to be patient when the plan is fully thought out. When there's no stone left unturned, and that's why going straight back to the business plan, right? Because it maybe, I don't know, man, maybe I sound like a broken record. Maybe it sounds boring, but when you go through it and do all that kind of work to think through, not just the entry and exit for a particular trade, but to think it in terms of the next 100 trades, the next 1,000 trades, how are you going to operate and why?
Yep.
Under what market conditions, your sizing, your trade management. What happens if all of a sudden the computer goes down, right? The broker, you can't access the broker. What are you going to do? Thinking through all those things and being meticulous about it, and it takes away pretty much all the fear.
Yeah,
because
without a doubt.
Know what to do.
Yeah,
and how to do it.
And
so I think that that's the thing that allows me to be patient.
Right on.
And how about you, Dennis?
Well, I kind of like the next one, is basically take responsibility for applying the knowledge. There are so many people who they've read all the books. They've, have been told, hey, you should paper trade. You should go do your trading simulations and all that kind of stuff. They've been told to do that. So they know that what they should do, but they don't do it. I mean, there's a verse in the ancient script that talks about St. Paul, who would say basically, oh, woe is me. I know what to do, but I don't do it. I know how to live, but I don't do it. And so I think that recognizing and applying knowledge is, basically a way to have a healthy fear. Because if I don't apply what I've learned, I'll never become the wise and profitable trader I was meant to be.
Right. Wow. Well, that's very interesting. I'm reading a book by this guy, Matthew Kelly. Maybe we could even do another show, I think, around this. But one of the big points that he was making in this book has to do around comfort, and one of the big reasons why people say that they want transformation, right? But most people don't really want transformation. They want little tweaks here or there. Transformation means getting uncomfortable.
Oh yeah.
And if we to the point that you just made, if we don't get out of our comfort zone, then we're going to stay stuck exactly where we are.
Exactly. Yes. Yeah. And so, yeah, it's kind of like, I've been doing the audio series from Jim Rohn, and he talks about that a lot. He says, he says, take inventory of yourself. And if you're in the same spot you were, if you're in the same spot today that you were 5 years ago, then clearly you have not been taking responsibility for moving forward. And he does talk about that aspect of some people are comfortable there, but and it's partly jumping the gap from I'm not comfortable there. Something has to happen. And he shares a story that I thought was a really applicable story. Is this guy down in Texas? He was so tired of his lifestyle, so tired of just the way he was living, that he basically said, "Dadgummit, I am never going to drive this car like this again." So he takes a shotgun out and he basically shoots the car like 100 times, big holes in the car from this and that kind of stuff. And he says,
sounds like a gangster movie.
Today marks the day that I'm going to start my progress. Now, I'm not saying you should shoot your computer screen or anything like that. I'm not saying that, guys. But what he would, he went on to become a very successful, profitable, wealthy man. And then he would share that story with people and says, yeah, he goes, finally, I just got fed up. I got sick and tired of being sick and tired. I got sick and tired of not having enough money to take care of my kids, not take care of my family, and driving that crappy car that I was driving. So he goes, you know what? Here, let me show it to you. And he'd take people out to the garage, and there was the car that was all blown to smithereens with all the shotgun holes in it. And he says, I made a stand when I basically killed this car. And that's the point in time when he started moving forward, and he never turned back from there. So I think that when it comes to things like fear and what we're going to do with our fears, we have to make a stand and say, enough is enough. I'm going to move forward, because I recognize if I don't move forward, in reality, life is going to pass me by, and it'll be like I'm moving backwards. So, okay,
that's great.
So, anything else there on the seven items that stand out to you?
No, that's let's move on.
Okay, so, okay, guys, from fearful to fear ready, and 3 shifts you can make immediately, to start, again, like we said, start taking action. From panic to pause, when you're trading, install or a 10-second rule before you do your trades, or longer. Maybe it's a half hour, that you're going to not do anything. Emotions to execution. From emotion to execution is you use your written rules on every trade. And I love what Mike has. He's got his trading plan, business plan. And Mike, if somebody was to do, how long does it take somebody to walk through the business plan that you've developed?
Oh, so just they could do it in an afternoon.
In an afternoon, okay.
It's designed in a way so that I wrote an ebook. The ebook is called The Trading Success Blueprint. It walks you through step by step what's needed in your business plan. Everything from like we mentioned before, not the markets that you're going to be trading, how you're going to be trading them, sizing strategies, how you're going to manage the portfolio. Also talking about the other parts of your business too. What kind of a budget are you going to have for your trading? So, charting services. If you're doing any kind of coaching or mentoring, journaling software, all that kind of stuff. Because if you're not budgeting the stuff out, things like that could get out of control very quickly.
Right on.
For too many things and not using them. So we want to be mindful about budgeting all that kind of stuff too. But to really just sit there, the ebook itself is only about 50, 60 pages. So you go
Okay.
through that, and that's going to walk you through how to write this stuff. Because a business plan that could sound daunting. I have an MBA, and
Right.
when I first had this idea, it seemed a little daunting to me. So if it sounds daunting to somebody else, trust me, I completely understand. That's why I wrote this in such a way where you don't need to be a business person in order to lay out your thoughts and
Right on.
to get them out there. Um, so I
So,
think to answer the question, you could do this in an afternoon.
okay. So do it in the afternoon, and then your takeaways from that would then enable you to continue to. I'm sure that you would come away with a plan of action that you would
Oh
move
yeah, of
forward.
course. Yeah,
But
that
both
you would come away with a plan of action, how to operate it, and you would have a working document. It's
right
not
on.
meant to be something that sits on a shelf. It's meant to be something that's there by your side, and you'll have iterations of it.
Yeah,
You write it. The first one that you write will not be the last one that you write. Uh,
right on.
this time next year, expect it to have evolved. Just like you plant a seed, you don't expect it to just sit in the ground. You expect it to grow and bear fruit. That's
Right
what a
on.
good business plan will do for you.
So, and then guys, I've laid in the comments. One is Mike's website, marawealth.com, because maybe you're sitting there going, well, I don't know if I'm ready for the full business plan yet or not. But the thing about it is, Mike also has another tool that I think is really great, and it's your 2-minute, exercise, Mike. And so,
Oh yeah,
that would be a good place to start, right?
so this right here, I printed out a copy of it. This will let you know where you're at, because it asks you 9 different questions that well, we could even look at a couple of them here, right? Like written business plan. Do you have a clearly written trading business plan, not just a trading strategy that outlines how you'll run your trading like a real business? Some people are able to check off yes. Some people will say, oh, well, I need to go and double check. Some people like, what are you even talking about?
Yeah.
So it just, you go and check off the boxes, and depending on how many of these are missing from this audit, and the audit will only take you 2 minutes, then that'll let you know, well, do I have 7 or 9 of them checked? Well, then you're in pretty good shape. If you have 4 to 6, well, you have a few weak points. If you're down to 0 or 3, well, you're kind of flying blind, and there's some holes to patch in this leaky boat.
Awesome. And then the other link I put in there, guys, is for the autopilot trading diagnostic. This is a trading habits diagnostic. Again, I'm taking about 10 minutes to take it, take the course. And what you'll get from that is you'll get a full-blown PDF report, basically identifying where you are at as a trader, along with are you a structured trader or unstructured trader? Are you under development? Are you a consistent trader? And what this will do for you is basically give you the report, and the report contains a complete list of a plan of action or a plan of attack for the steps you need to take to raise yourself up to the next level and continue to improve. So those are 2 great tools. I encourage you, go to marawealth.com, or you can see the link there, and I will put those links in the description, and we'll put them over on Spotify in the description. So Mike, basically, guys, if you have any topics you'd like Mike and I to talk about, and of what we've talked about today, what's one fear you're ready to face this week? And you can DM us or leave a comment down on Spotify, or a comment down on YouTube or X, or where else are we at, Mike? We're at X, we're at LinkedIn,
All over the place.
we're all over the place. So I will say aloha, God bless. Anything last and finals, Mike?
Yeah, that's we covered a lot today. Let it sink in. Check out Dennis's diagnostic. I'm going through it right now. It's gorgeous. It's going to help you out a lot. And if you have time, check out the 2-minute audit over on marijuana.com too. And we'll see you next time.
Okay. See you guys. Aloha.
Bye, everybody.